Hello and welcome to the National Center for the Middle Market second quarter update, where we'll be walking through a more detailed explanation of the current performance, sentiment, COVID-19 update, and trends in the current middle market sector based on a semi-annual survey of 1,000 mid-sized companies across the United States. If you have any questions throughout the presentation, feel free to submit via the Q&A function on the Zoom control panel, and we will do our best to answer each one at the end of the webinar. Without further ado, I am pleased to introduce Doug Farren, Managing Director of the NCMM.
Thanks, Kelly, and welcome to our middle market update. I'm glad you could join this session with us today. As Kelly said, I'll be sharing the latest data and insights from our Q2 middle market indicator. I'll talk a little bit more about that survey here in a second. But obviously, lots and lots of information to share. We've got some really good news in terms of the performance metrics that we've collected. Also, our continuing series on the COVID-19 pandemic, we've got some new insights to share there, as well as a little bit of a glimpse into how technology and digital transformation continues to impact mid-sized companies. We are recording this session, so if you have colleagues or other people that you know that weren't able to attend today, we'll be making this presentation available most likely on the NCMM website on the middle market indicator page. So let me dive into this here. Okay, if you're not familiar with the National Center for the Middle Market, I just want to take a minute and tell you a little bit about our organization. So we are a collaboration between the Ohio State University Fisher College of Business and Chubb. Chubb is our primary sponsor. We are also fortunate in this survey to get additional support from Visa as well as VistaView Solutions. So we are grateful to both of those organizations for providing us with support for this round of the MMI, as well as contributing their own expertise and insights into a lot of the digital information that we were able to collect. But really, the center has been around for almost 10 years. We're going to be celebrating our 10th anniversary this October, and we are a source of knowledge, leadership, and insights to help a variety of audiences. Obviously, middle market executives, owners, and others, policymakers, and other key stakeholders, such as media, academics, students. Our information is really designed to provide critical insights into the U.S. middle market. And we do that primarily through research, but we also have benchmarking tools on our site. We do quite a bit of outreach engagement across the country. We have a number of key partnerships across the country. And again, through all those avenues, we're trying to share this information about a critically vital segment of the US economy. How do we define the middle market? Again, in our 10 years, we have used this revenue-based definition of $10 million to $1 billion. We know that there are organizations that have differing views of the middle market. Some even use headcounts, for example. But we feel the 10 million to $1 billion is an appropriate distinction. Of course, within there, we know that companies at the lower end of the middle market are going to look and behave much differently than companies that are nearing $1 billion in revenue. So in many cases, as well as in the MMI, we have a lot of sub-segmenting into the different revenue ranges. About 200,000 businesses in the US. Of course, this is constantly changing. You've got mergers, you've got sales, you've got companies that graduate into the middle market, you've got companies that grow out of the middle market. So it's a very fluid number, but it's roughly about 200,000 or so businesses, about 3% of all businesses in the US. It does represent a third of private sector GDP and employment. So when I mention critical part of the US economy, that is the reason why. And in fact, if you took the middle market and made it its own country, it would be the 5th largest economy in the world. A majority of the companies in the middle market are privately held. That's what makes the work of the center so critically important, is because it's not easy to just Google information about mid-sized companies and get a lot of good information. So we were actually founded on the idea that we would serve as a resource and insight about the US middle market. So let's talk about what's new in terms of the latest data that we collected. First, I want to talk a little bit about our COVID-19 pandemic research. You may have been following this since March of 2020, when shortly after the pandemic was declared by the WHO, we went out with a very quick pulse survey of about 260 companies, just to understand what was happening. At that point in time, there was certainly a bit of uncertainty about the potential impact, about the length of time that we would be under these, highly uncertain conditions. What we have done in the last 3 MMIs, going back to Q2 of 2020, Q4, which was fielded this past December and released in January, and then fingers crossed, what we hope might be the last time we actually explore this, although things remain quite fluid. We have gone out in this latest Q2 version to ask questions of mid-sized companies about how they were responding to the various conditions. So I'm going to share some of that data for sure. It's very interesting. A lot of times we see in the news what's happening with big corporations and what's happening with small businesses and startups. But our COVID pulse insights certainly reveal some of the things that are on the tops of minds of middle market leaders. So where we stand today. So right now, what we're seeing is more of a return to normalcy. And I say for now, because when this data was collected, which was throughout the month of June, we were certainly in a very different situation than we are today. Looking back even just 6-7 weeks, with the rollout of vaccines, with the lifting of a lot of different mandates and restrictions and orders, and a, quite frankly, as you'll see here in a moment, very, very robust confidence, pent-up demand, and really this thirst for companies to get back into normal operating conditions. What we saw was basically a lot of the difficulty that businesses faced over the last 16, 17 months have consistently continued to decline over time. You can see here from this chart showing, several of the things we were asking about businesses. And as compared to where we were back in March of 2020, again, a lot of the concerns continue to go down, from uncertainty being resolved, continuity of operations. You can see working capital, not much of a concern. The only one that I would really point out is still being, 50% or more of the companies kind of citing it as a difficulty, is maintaining employee communications. And that's, as we know, largely driven by the situations of remote work, stay at home, alternative work arrangements. I'm going to be showing you kind of the latest view of where the middle market stands in terms of their return to work locations, but that kind of remains the only one that I would say would be, more of a significant difficulty today, as it was, almost a year and a half ago. Let's get to the performance. So the good news is we've got some very, very good numbers to report, strong performance over the last 12 months. Starting on the left-hand side, you can see revenue growth reported on average across the middle market. Again, our sample is of 1,000 C-suite decision makers at middle market firms of all sizes, all industries, from coast to coast. And the average reported revenue growth over the prior 12 months, so again, June 2021 back to June of 2020, was a very strong 8%. That's slightly above where we've seen the MMI historically since its launch in April of 2012. The average has been about 7.5%. So this is a very good story. You can see the S&P 500 had a similar strong rebound in terms of revenue growth. We use this as a proxy to compare to large businesses. So again, over 15% in the S&P. And you'll notice at the bottom there, the projection is even stronger, close to 10% top line revenue growth projected over the next 12 months. And as we also know historically, middle market executives tend to be very conservative in these projections. In other words, when we ask these questions about where they see both future revenue as well as future employment, they typically tend to underpromise and overdeliver, where we've consistently seen the actual results outpace the projection when we revisit this a year later. So we certainly hope that's the case. Moving on to employment growth, nearly 6% growth. Again, another good story here after we had seen declines in the previous two surveys. We do a proxy comparison for small and large business using ADP's monthly payroll and jobs reporting. We've been doing that for a number of years as well. And you can see the middle market has outpaced both small and large businesses. The projection at close to 9% is an interesting one because, as a lot of us have been hearing and perhaps even experiencing ourselves, there are lots of challenges right now out in the labor market. So it'll be interesting to see if challenges around attraction, retention, development of talent will impact this projected growth number in terms of employment. And certainly that's going to vary quite a bit by industry as well. Moving on to capital investment. For those familiar with the survey, we asked the question of middle market leaders, what would you do with an additional dollar of revenue? And again, traditionally, our average has been about 2/3, between 65 and 70% of the companies saying that they would invest that additional dollar. The remaining companies saying that they would either save it, in a war chest or use it for some future capital investment project and so forth. We saw significant dips in this investment over the last two surveys. It is slowly starting to rebound, although it's lagging some of the confidence that you see to the right. The final column here is the economic confidence across various levels, so global, national, and local. Very pleased to report that these percentages of executives expressing high levels of confidence are record highs. I'll say that again, record highs over 35 waves of the MMI. We have never seen percentages this confident across any of the three dimensions that we measure. So again, we have to understand that given all the disruption, uncertainty, angst, there is a real desire to get back to normal, get things up and running, and really push the gas, so to speak, on the acceleration of growth. Let's dive a little bit deeper into the revenue trends. So again, this chart goes back a couple of years. You can see the red line here are the previous quarters reporting on revenue growth rates. So these are past 12-month growth rates. The average is 4.3%. I mentioned a higher percentage. That's going all the way back to 2012. Of course, this shorter time duration is very seriously impacted by the last two surveys. Both Q2 a year ago and Q4 this winter were the first time in the MMI's history that we had seen negative average revenue growth rates across the middle market. Of course, as I said earlier, that has now rebounded. We're back up to 8%, very strong number. And then you can see out to the far right there, the 12-month projection at 9.8%. So again, some of the key things here, it looks like the middle market is back on track. We traditionally see the middle market outpacing the S&P. It's not the case for this particular survey, but that has been the usual trend over time. But we need to peel this back a little bit deeper because that 8% growth is not universal. And I'd like to spend a little bit of time walking through this a bit because it has become very apparent to us that the recovery is very uneven. If you go back to the 2 years ago, so at the far left is the percentage of companies experiencing different rates of revenue growth. You can see that 77% of the companies reported revenue growth. And at that top 10% or more, what we would call growth champions or growth leaders, there were about 38% of the companies saying that they had increased quite a bit over the prior year. Conversely, at the bottom, you can see only 9% were reporting revenue decreases, another 14% saying that there had been no change year over year. All that resulted in an average revenue growth rate of 8.5%. That pattern had remained fairly consistent survey over survey over survey. Flipping back to a year ago, 2020, we are at the depths or the biggest drop in terms of confidence, in terms of uncertainty, and certainly you can see performance here. Only 38% of companies saying revenue had increased and 42% saying it had declined, thus driving this average of minus 3.7%. Now, this survey, we are releasing an average number that is at 8%, but you can see it's very uneven. Now we see a record high number of companies growing 10% or more, those growth leaders, which are circled there. At 45% of the companies in our survey are reporting growth over last year of 10% or higher. But at the other end, another 34% are saying that they're still flat, or 21% of that, in fact, declining. So there are companies that are still struggling. We're seeing a lot doing well, but we're also seeing about a third of the middle market continuing to struggle. So we have to understand that that 8% average growth rate represents some degree of recovery, but those high flyers, those growth leaders are somewhat masking the challenges that remain. And surprisingly, as I'll show here right now, it tends to be affecting a lot of different industries. So this is a little bit surprising to us. You can see revenue by industry, whereas you might expect places like retail, trade, maybe construction or some others to have much lower results. You can see that the industry view of revenue growth is actually pretty strong across the board. We're seeing 5.5% or higher pretty much in every sector. Projections that are much, much higher than that. Of course, as I mentioned, we'll have to see how the labor market and some of the issues around attracting talent might affect these numbers. But by and large, we're not seeing any particular sector saying they continue to struggle. Now, within the retail trade, we would be seeing things like restaurants, hospitality. And so that's where you're going to get, again, that mix of some growth leaders, some high flyers, again, with others that are continuing to struggle. So a little bit of masking going on there. And then on a related note, in terms of expansion, this is the trend of where companies are reporting, things that they're doing on an expansionary basis to help drive that growth. This survey, the highest activity is around expansion into new domestic markets. You can see about 32% of the companies have reported doing that, which is an increase over the last survey in the fourth quarter. Introducing a new product service is still high, about a third of the companies saying that they're doing that. And adding a new plant or facility remaining flat at under 20%, and about the same percentage of companies saying that they're taking on new debt. So just wanted to point it out that new domestic markets appear to be the primary target for expansion. Now let's take a look at employment. Again, reported past 12 months employment growth at 6%. I already mentioned the comparison to small and large there. You can see the trend here on the chart, again, going back to 4 years ago in Q2 of 2017. What you see is consistent middle market performance that outgrows both small and large in terms of adding employees. Of course, Q2 and Q4 were the precipitous dips with negative or declines in employment. To be expected, we saw the same thing happening in the ADP numbers as well, particularly in Q4, where you saw big dips for both large and small. And right now we see a rebound across all three. Again, small business 5.3, large business 3.1, in the middle market just about 6%, with that projection, again, a year from now at close to 9% in terms of employment growth. Take a little bit of a deeper cut here into the industry view. Again, similar to the employment story, growth kind of across the board. Now Now, these are, in some cases, a recovery of jobs that disappeared during 2020. So kind of have to make that distinction between true growth and somewhat a recovery of jobs that may have been lost. But we're seeing positive employment growth, ranging from the 4% shown in construction all the way up to over 10% in the wholesale trade sector, with again, very, very strong growth projected in the next 12 months as well. So we're going to be keeping an eye on this, obviously. The next survey will be in December for Q4. So we're going to want to take a closer look at how the entire year of 2021 shakes out. But very interesting story on a sector basis. I mentioned economic confidence. So again, this does go all the way back to the MMI's inception back in 2012. At that point in time, we were still feeling some of the aftershocks of the financial crisis, even a few years later. And as you can see, it's kind of slowly been increasing over time since 2016, pretty much flattening out across all three of the economic dimensions. And then the dips over the last two surveys with this very solid rebound. And I mentioned all three, global, national, and local, are reporting the highest numbers we've ever seen within the MMI. So good story there. It's good to see that executives are feeling confident about their future. As I mentioned at the beginning, this data was collected in June, so that confidence may be shaken a bit by things that we're seeing with variants and rising case counts across the country, and even seeing that a lot of big corporations are kind of rethinking their back to work plans. But as of right now, this is the story that we've seen. And again, huge increases from the winter when we surveyed. This is that invest an additional dollar question. Again, historical trend back to 2012. Q2 a year ago was when the first time where we ever saw these two options basically converge, right? Where we were almost at 50-50 in terms of companies saying that they would invest or save. Again, it's slowly starting to creep back up. You can see, 52% a year ago, 57% saying they would invest. Now we're at 58%. So the actual sentiment on investing is kind of lagging that confidence still. But with another, 6 months of strong revenue growth, hopefully a good story, macroeconomic story across the country, we can actually see this start to develop. And this is just a comparison of where those investment dollars would go. So on the left is our Q4 data from December of 2020. You can see those investing 57%, again, total of the sample. The biggest targets were in information technology. Again, a lot of us were still working from home. A lot of us, still looking at things like cybersecurity and updating technology in order to drive efficiency and productivity in an alternative work environment, followed by plant and equipment, adding personnel, facilities, and so forth. That has shifted somewhat in this latest cut. We're seeing 25% of the investors targeting new plant and equipment, 18% looking at IT, another 18% looking at personnel, training, and development. So a little bit of a shift there, but again, we're going to talk a little bit more about the technology piece and what's happening in the middle market right now. So now what? Moving forward, again, these are the projections. Not going to spend a ton of time here because I've already covered this, but a year from now, projection just under 10% revenue growth. You can see, driven by two really underperforming surveys in terms of the averages, so to speak. About 5.2% has been the average, so we're well above that. But again, we'll see how this shakes out. Similarly, employment, the projections at close to 9%, highest we've ever seen. Now, again, could be related to recovering some jobs that were necessarily eliminated during the depths of the pandemic. And again, we've already talked at length about some of the challenges perhaps in the labor market. So now getting into some of the specific COVID pulse related information. So These are long-term challenges. That chart I showed at the very beginning was around difficulties running the business. These are more of the long-term challenges that companies are foreseeing over the next year. We've been asking this over 4 different pulses as well. You can see a lot of these have dropped almost to nothing, particularly around projected revenue, growth initiatives, demand. All of those things are really, really low on terms of issues that may be keeping executives up at night. The one that I've highlighted is supply chain. We're still seeing concerns related around raw materials, around making sure that suppliers themselves are able to deliver products and services effectively. And then, of course, across various supply chains, we continue to see rising costs, whether that be in the raw materials, whether it be in services or other components that are of concern to middle market customers and companies. They're wanting to know with some certainty whether they can depend on their supply chain to deliver effectively, and that's probably the one that has remained. It's come down, but it's still remained consistent across these 4 different cuts. I mentioned back to work, so we've been tracking this as well. So the status of the workforce, and again, this is as of June data collection, over half of the middle market reporting that their workforce is fully back to their work location, whether that be an office, a factory, wherever that primary location is. Another 35% were reporting that they were in some basically some part of a phased return. 45% of those saying that they were fully back. So on the whole, about 7 in 10 middle market workers are back. You can see only about 11% saying that they have a schedule or a planned return in place. That could be, Labor Day, later this fall, later this year. Of course, as I mentioned, the fluidity, these plans might be changing. As we see companies start to rethink whether they really want to have their people back right now, whether they should maybe pause a bit or maybe go to something that's a little bit more staggered. This is, again, what we saw as of June. So most of the workforce back, most planning to come back, only a very, very small percentage saying, that they had no plans to return. This is another chart that we've been sharing over the last couple of presentations as well. So we look at all the different business activities listed here on the left of this chart, and we've been asking companies about the long-term impact of the pandemic on various activities, ranging from revenue, operations, productivity. You can see the list here. For the past couple quarters, what we've been doing is netting out those that are saying there's been a positive impact with those that are saying there's been a negative impact. And as you either recall or would imagine, most of these activities have had negative impacts over the last 15 or so months. The refresh here is showing that most of these activities are now viewed positively, although the 2 I bracketed still kind of have a similar story from prior presentations. One is that supply chain continues to be the lowest. In other words, the smallest gap between positive and negative impact at 5 percentage points. Digital transformation continues to have the highest gap, 37% favorability in terms of percentage points positive. Now, last quarter, when I made this presentation, digital was the only one that was positive. And so we wanted to explore that a little bit more in this survey. And the remainder of my slides here are going to talk a little bit more about some of those digital impacts within the middle market. So here's another really, really interesting question. This went into our COVID pulse set of questions to middle market executives, but a lot of questions around changes that have been made, right? Things that have undeniably companies have been forced to either invest in or change or adapt to just out of necessity. And what the center wanted to do was understand from a middle market financial decision maker perspective, what are those changes in their businesses that they predict will be permanent changes versus those that may only be temporary and go back. So what we've captured here are kind of the list of top changes that one have already been permanently made, or the green dot there represents the percent of companies that are planning to implement these changes and also telling us that they're going to be permanent changes. The top three, which are here in the red bracketed box, are all technology related. So no big surprise, an increase on cyber and data security, again, largely related to remote workforce, having to share company information and files and things, just caused a lot of executives to rethink their cyber security models, what protections they had in place, even looking at things like insurance coverages for data breaches. So 43% of companies telling us that increase in spending is going to be something that they permanently look at. Similarly, with the cancellation of a lot of events, huge pullback in customer visits, business travel, we're seeing that another 43% of companies are saying they're going to permanently think about ways they can engage their customers in ways that are driven by technology. So is that continuing to have Zoom meetings? We talked to a company last year that, basically bought drones and made videos of their factories so they could do almost real-time video production capabilities to share with their clients and prospects. And then finally, the use of video conferencing platforms. I mean, I think a lot of people say that they miss the interaction and camaraderie of being with colleagues and talking with people face to face. But the reality is, there will permanently be a lot of use and utilization of video conferences and platforms to have meetings, to engage with both employees and customers. And you can see the rest of the list there. Things around culture building, enhanced safety measures for both employees and customers. About a third of the companies saying that they're going to permanently implement some type of flex work. Of course, that'll vary across industry as well, but some really interesting data here to see how the middle market is going to permanently change as a result of the pandemic. Focusing in a little bit more on the digital transformation journey. So on the left, you see, we asked companies about the importance of digitization to their company. And over 50% are saying that it is an important thing for them. However, when you go to the right and we ask firms to compare themselves to the rest of their industry, only about a third are saying that they felt like they were very advanced or ahead of their peers when it came to digital, the use of technology, digital transformation, all those types of things. So clearly, there's this gap between the recognition that it's important and then where firms stand today. As a follow-up, we wanted to know, tell us where you stand in terms of your state, in terms of using digital solutions. So as you look at this pie chart, the blue represents the 25% or so, quarter of companies that are in the very, very early stages of doing simple things like conversion from paper into digital formats, right? We would call that basic or behind even. 53% of the companies are using digital to automate and optimize. And so that's where the bulk of the companies stand today. And then the remaining 21%, which we would pretty much categorize as more digitally advanced, are actually attaining outcomes that would not be possible without the use of this technology. So again, very interesting kind of a landscape view here of where companies think they stand in terms of their digital journey. And then again, there's the 21% advanced, 25% somewhat lagging. Where do companies view digital as part of their strategy? Well, 4 in 10, or almost 50%, are saying they have a roadmap. They've actually built digital innovation into their corporate strategy, which is great news. On the flip side, there's another 40% that know, just as we saw on the last slide, they know that this is an important thing, but they lack kind of a plan to do it. Maybe they don't know where to start. Maybe they don't have the resources. Maybe they have a budget concern or cost constraint, or they've got other priorities that are just more important to them at the moment. Um, and then there's, a remaining few, 16%, that are able to do it or just don't view this as a priority. So there's a clear delineation here between those that have built this into their plan and those that still have an opportunity to do so. In terms of the goals, right, so on the left-hand side of this slide, no big surprise, the biggest goals tend to focus on those hard cost savings, creating more efficiency and agility, even creating better experiences for customer employees. And what that translates into are technology investments that are focused a lot on the operation. So moving things to the cloud, eliminating a lot of the paper that exists. And we saw that in the one slide, right, where about 25% are actively saying that they're trying to do these types of things. Other investments would look at more advanced solutions like an ERP, accounting software that can help drive efficiency, better records. And then as you get down the list, you get into other options like artificial intelligence, Internet of Things, integrating systems, and so forth. So these are areas where companies are thinking about making these investments. I kind of alluded to this earlier, though, there are deterrents, right? There are not unlimited resources to be able to invest in these things. And let's be blunt, a lot of times the technology that is either going to be the most effective or the most attractive is not cheap. And clearly leaders are telling us here that the biggest deterrent for them is either, the cost or just not having the budget to be able to invest in these different opportunities. The second biggest would be time. So we know that historically, a lot of middle market companies have lean management teams. They're running a lot of different areas. Their time is stretched thin, and therefore, this might not be something that they can step back and spend a lot of time thinking about. And finally, 28% are saying that they lack the resources internally to implement the solutions effectively. So those are some of the biggest barriers in terms of advancing the digital journey past where it is today. Finally, I'm going to explain this chart a little bit, but this is IT spending by different segments, revenue segments. The first time we've looked at revenue segments in this presentation. But you can see 5 different buckets here represented. So operations, cybersecurity, sales, back office, meaning things like payroll, HR, and so forth, and then finally accounting. So those are the 5 categories here. The different bars within each category, the red bar being total middle market, and then each subsequent bar being those 3 revenue segments that I mentioned at the top of the presentation, where we typically split up into 10 million to 50 million being lower middle market, 50 million to 100 million core middle market, and 100 million to $1 billion being our upper middle market. You can see in terms of operations, lower and core are outpacing over 12% of their IT allocation going toward those types of investments. Cybersecurity, very interesting. The core middle market, those 50 to $100 million companies, are actually outpacing the other 2 revenue segments at over 12% of their IT investment going toward cybersecurity. Similarly, in sales, much more of a focus in that revenue segment than the others. And you can see in back office and accounting, things are pretty standard across the board in terms of their investments. So I think we've got some questions, but before we get to those, I'm just going to summarize here. So the middle market is on its way to recovery. Very pleased to see positive numbers once again in the MMI results. Pretty robust top line revenue and employment growth after those 2 consecutive surveys where we had the declines. Confidence also at record highs. We hope that is a preview into what'll be an even stronger finish to the year. We do see that capital investment is still lagging a little bit behind that confidence. And as I mentioned, the recovery is not by any means universal. We do see this distinction between those growing 10% or more at the top end and those who are, quite frankly, still continuing to struggle In terms of the issues, I talked a little bit about supply chain and some of the challenges there. Customer retention engagement, that's starting to come down from where we've seen the last two surveys as well, but continues to weigh on the minds of leaders. And then as we just saw in the last handful of slides, digital transformation is what's actually fueling a lot of the changes in how middle market companies are going to continue to grow their business, support their workforce in changing in different ways, and then of course engage in with their customers and prospects. So that is the summary of the information. I know we have questions that have been submitted, and I'm going to try to get to those now. So let me, I'll just leave on this slide, but let me stop share and I will get to some of the Q&A right now. So let's see. So it looks like the first question was when we showed the 3 periods of growth at 1,000 companies. The question is, what extent do companies move in and out of the population? And so, yeah, that's a great question. I didn't really explain the methodology behind our survey, but we do survey 1,000 C-suite executives. They're not the same companies every time. We access a panel of executives who've actually opted into taking these types of surveys. So essentially, it's the first 1,000 respondents. And then on the back end, we work with a third-party research firm called RTI. They help us weight the results of the survey to the US business census. So the 3 parameters that we use are industry makeup, geographic makeup, and then size makeup based on those 3 revenue buckets. So that way we ensure that the results sufficiently represent the US middle market and aren't skewed by any one of those parameters, whether it be a certain number of industry responses, a certain number of responses from a certain area of the country that may have different economic conditions and so forth. So very good question. It's not the same 1,000. It changes from survey to survey. Next question. Does that 34% of struggling companies consist mostly of lower middle market companies around 10 million in revenue? Also a great question. Actually, no, just as I mentioned that it kind of is across the board in terms of industries, it also is across the board in terms of company sizes. We didn't see any particular revenue segments stand out in terms of those that are struggling. Similarly, in those that are doing well. So it's an interesting kind of a demographic there to see how the differences that are across the board. But that came in from Greg Stanga. I'd be happy to kind of talk offline and share some additional data on there as well. Let's see. Question came in, what are examples of customer engagement tech? Yeah, the one I mentioned, this is just off the top of my head because I know we did a podcast with the CEO, a company called PDC Machines. They're out of the Philadelphia, Pennsylvania area. They make very highly engineered kind of compression gas components that serve a variety of industries across the world. So their supply base or their customer base is global in nature. A lot of their products go into the clean energy and transportation industry. And prior to the pandemic, their leadership team, quite frankly, spent a lot of their time traveling, visiting customer sites in Asia and around the world, and actually doing, in-person demonstrations of the product. Trade shows, another good avenue for doing that. And what I thought most interesting in terms of the shift, in terms of their customer engagement, I mentioned the drone technology. So they hired a video production company. They invested in several drones that they used to fly around their factory and actually record real-time production, real-time demonstration of the product. And it was reported by the CEO of this company that it turned out to be a highly effective way to engage customers, to help answer questions in real time, and not feeling like they were losing out on that opportunity. So that's the one I can think of. I'm sure there are others. Be happy to source some of those examples, but really good question. The next question we had was, how do you define small versus large companies as referenced in an early slide? So if the question is around the employment numbers, so that again comes from ADP. They produce a jobs report every month. We use, again, they have a headcount breakout. So the way we use a proxy for that, and I know it's going to be different by industries, but 0 to 50 headcount we use as small. 51 to 500 is essentially middle market, but we're collecting our own data. And then 500 and above, again, it's just a proxy. We know it's not perfect, but it does serve as a source of comparison. So we can look at how the middle market has grown versus those two other segments. So very good question. Were there any questions on the plan to rely on partners to achieve the digital goals, particularly as it relates to the move to adopt AI? Yeah, there were some specifics. We did not include that in to this particular presentation. I know some of the partners who helped support this survey are going to be doing their own events and presentations, and they've taken bits and pieces of that data. But yeah, clearly the middle market relies on partners to help. As we saw, one of the big challenges after cost and time was having the right internal resources that have the understanding to be able to implement these things. So that's when it becomes, critically important to have the help of subject matter experts, consultants, people who specialize in these different technologies that can help in those areas. So a question about the copy of the slides. We will be posting the slides as well. So those should be available in terms of a recording of this video. Next question, with supply chain and cost challenges like steel going from 400 a ton to 2,000 a ton, any data on how that is going to squeeze available capital needed for other expansion? No, we don't have any specific data. It's a very good question. Obviously, that will impact the ability to invest in other parts of the business if critical raw material supplies become much more expensive. So, obviously that could be passed on to the customer, but as mid-sized companies, a lot of times that becomes a sensitive issue as well. So yeah, there will be upstream and downstream impacts in terms of rising raw materials costs. We don't have any specific additional detail, unfortunately, about the impact on expansionary activity. We have another question here about notice the human capital investment trend, culture building, training and development going up. So yeah, I mean, that's a concern, right? With not being face-to-face in a lot of these businesses, it's become evident to leaders that unless they've had a very strong culture in place and did a lot of things to make their people feel like they were still part of the team, this is going to be an ongoing need. There's going to have to be a need to kind of invest in culture, making sure that people feel like there's developmental opportunities so they can continue to advance their careers. We've also seen kind of this shift where some in the workforce are demanding that flexibility. So they want to work remote, or at least they want to have the ability to work in some kind of a hybrid environment. And middle market companies who aren't able to provide that may run the risk of losing people to either competitors or to other businesses. So yeah, this is going to be a critical one, particularly given what we've seen as long being both a kind of a skills gap issue, as well as a employer brand issue for mid-sized companies to be able to effectively attract talent into their organization. So one that we're going to keep watching. Yeah, great question here. Is there a strong correlation between the implementation of digital transformation and company success? Yes, there is. I'm would have to find the specific numbers. We did do a cut on this data to look at growth rates in terms of percent of investment into digital and how far they were along that path. So that's definitely something I could look up and provide in a follow-up. But yeah, we do see a correlation there. It definitely is going to feed growth. It's going to help not only with productivity and cost and efficiency, but also drive a lot of growth and success. So we definitely think there's going to be a correlation there, and I can share that again in more of a one-on-one follow-up. And then last one I see here, has the Fed's stimulus check stoppage improved the back to work situation? Probably too early for us to say that. Again, our survey was back in June. I think a lot of, depending on the location, some of that stoppage happened at different times in different states. I believe here in Ohio, our governor stopped some of the additional unemployment benefits actually in June. So it's going to vary by country. But yeah, with the decision for the federal benefits to cease, yeah, it'll be interesting to see what happens going forward. But of course, hospitality, restaurants are all saying the same thing, that they're just struggling to attract workers. And I'm not an economist, but I've seen a lot of debate around the economic arguments of whether it's the stimulus or whether it's other factors like wage and childcare and those types of things. So perhaps in the next 6 months, we'll know. And let's see if we have any others. Well, I think that might be the questions for now. Let me go back to, again, I appreciate you for joining us today. As I mentioned earlier, we will be posting the video. We'll be posting the slides as well. So please make sure to check back to our website, which is listed here, middlemarketcenter.org. You can also find all of our research on our site, including the MMI. You can also subscribe to our biweekly newsletter. We share a lot of information in that newsletter about current research, about upcoming events and activities, as well as other content, things like our Company of the Month series, where we profile various middle market companies and their own growth stories, as well as our podcasts, where we interview CEOs and other influential people in the middle market to talk about a number of different topics as well. So I appreciate everyone's time. Thank you for joining us, and look forward to our next update, which will be the Q4 indicator coming out in January. And our presentation will most likely be at the beginning of February, shortly after that release. Thanks. Hope you have a great day and great rest of the year. Take care.